comedy there. That's Wham! I'm Morning Dave. We're at 8:41 here, 19 now before 9. And it's time to check in and see how Wall Street's treating your money this morning. I'm looking at the early indications and saying I have no particular reason for why this is happening, but evidently we feel good about banking again all of a sudden. Let's check in and see if Phillip Statler from Statler Financial Services can explain that any better than I can. Phillip, good morning. How are you?
Hey, I'm doing well today, Dave. I wish I had an explanation, but I don't. Only thing I can think is that people are feeling better, thinking they got beat up more than they should have, and so they're thinking they hit a low and are trying to bounce them back up.
It's got to be something like that. I mentioned when we were on the phone before going on the air that of my top 5 winners on the early morning upward movement, they're all financials, and I'm sitting here looking at it and saying, okay, what's wrong with that picture? Because they actually did a shotgun wedding, but Silicon Valley Bank got sold over the weekend, and boy, did that North Carolina bank get a deal, didn't they?
They really did, man. First Citizens Bankshare Corporation bought $72 billion worth of Silicon Valley Bank's assets. Get this, Dave, for $16.5 billion. I mean, that's a pretty good sale price.
I'd call that a flashing blue light special if I've ever seen it. And given the fact that all of their depositors were insured and made whole, it sounds like a pretty safe investment for that North Carolina bank too, doesn't it?
Yeah, it really does. I mean, I'm thinking, geez, that's a going out of business sale for sure.
Yeah, I'd take a bargain like that and on my family budget level any day of the week. But and that's enough to be able to give people faith in the banking. And when you think about it, it probably is, because the government's been bending over backwards to say our banking system is secure and well capitalized and all of that. And then the unspoken side of it is, and when it isn't, we'll make sure it is, right?
Exactly. That seems to be the case anyway, that, they're backstopping everything. And like a lot of economists and folks on the talking heads, not so sure that's a good idea.
And if you don't trust the Fed, you don't need to worry about a doggone thing, because Congress is going to get into the act. All the regulators are getting hauled in front of the House Financial Services Committee. Worse yet, it's not even the Senate. It's the House Financial Services Committee, where you got a whole bunch of guys on the Democratic and the Republican side generally looking to try to get some free TV time. I mean, it's not limited to any one party. But they're going to have the chairman of the board of the FDIC, they're going to have the vice chair for supervision of the Federal Reserve, and the undersecretary for domestic finance, all getting hauled in front of Congress today to let Congress fix the banking system. Now, if you weren't secure before that bit of news, Phillip, boy, you ought to go out and buy about $100 million worth of bank shares, right?
I'm telling you, man, I just don't. Congress gets involved. I mean, I'm just tongue-tied.
My diction is so good, and my tongue is in my cheek. I mean, I was really feeling pretty good about things until I found out Congress was going to fix the banking system. And to my mind, that probably is a ticket. If you can get things screwed up, just give it to Congress. They'll figure out a way to mess it up, won't they?
Oh, that's definitely the case.
Definitely we finished out last week with the usual twists and turns. We had Jerome Powell saying that don't worry about it, all depositors' savings are going to be safe, followed up by the next day with Janet Yellen saying no, they aren't, and then going to the woodshed and saying, oh yeah, well maybe they will be. I mean, I keep standing on the notion our local banks are conservative, our local banks are safe. The regional publicly traded banks with a record of being adventurous. I mean, I'm not 100% sure that we're done with the mess at the moment on the big publicly traded banks, and I'm kind of looking at this and saying, why are we buying them up like chiclets all of a sudden this morning?
Well, and I think here's probably part of the things we have to look at is commercial real estate. I saw a little headline. I didn't get a chance to dig down into it, but one of the big banks that follow different industries came out and said that, commercial real estate, they expect a huge delinquency in rents coming up here over the next short term. So that could be the next issue that we have, is if we have a lot of commercial real estate that's got mortgages on it, that could be the next shoe that kind of puts banks in a little bit of a tight spot.
I was going to say that was kind of like number 4 on my list of stuff to talk about today. One of my columnists was saying that's going to be the next big crash, commercial real estate. I mean, they threw up the warning about auto loans a while ago. That's still kind of a bubble to worry about. But the next one up probably is going to be commercial real estate that we need to keep an eye on. Once again, held disproportionately by the big banks and big trusts of bundled real estate loans on the commercial front, and that's the next thing that they're going to have to worry about.
Well, it is, and I'm just looking at next or this week's kind of what we can expect economically to come out. We've
Yeah.
got some real estate stuff coming out. The S&P Case-Shiller Home Price Index comes out actually tomorrow at 9. Will be after us, but consumer confidence comes out tomorrow, late morning. We've got pending home sales, come out some Wednesday. Thursday, obviously, is jobs, but we also get the second revision for the GDP for the last year, I guess. So that's going to be interesting to see where that comes in at as well.
That, I suspect, will probably be the market mover of the week as far as government data dump is concerned, because the last week of the month tends toward being rather quiet. We're not going to get unemployment numbers for the month of March until the end of next week because of the way the month falls. So we're going to be kind of sitting on our hands and trading on combination of gossip and what little government data that we actually get.
Well, yeah, but I got to tell you, Friday could be a big day, Dave. We get personal income spending for February. We get the core PCE for February.
Ooh.
And so we get some numbers for February coming out Friday morning.
Now, that's interesting. The PCE is kind of interesting because that's the number that Jerry Powell has said that he watches more carefully than the gross domestic product or the consumer price index. He watches personal consumption expenditures. And if that goes up markedly, then it's going to give us an indication that the Fed's getting the message that inflation is not only not under control, but needs to be whacked a little harder with another 2x4, and all that moderating language that we heard last week suddenly will go right out the window.
That's right. So we'll Friday could be a big day. Could be a big market mover.
Absolutely. Through it all, while we're looking at inflation and consumer concerns and banking issues on the big regionals and whatnot, consumer spending continues to go. I got a report here out of Citi, the big credit card people and bank, that aggregate retail spending in March is only down slightly compared to February. Interest rate sensitive sectors like home improvement, home furnishings continue to see the largest decline, but by and large, we're still burning plastic almost as much as we have been. We certainly haven't seen capitulation on the consumer spending level yet. So there might be, some inflationary news in the PCE, but when we get retail sales and information like that, I suspect it means the consumers are still going to be supporting the economy, even though all of the indicators don't necessarily look like they should be.
Well, that's true. And as long as they got credit and as long as they can make the minimum payment, you're right. That plastic's going to just keep working overtime.
Absolutely. It's a consumer-driven economy, so I'm not 100% sure that's a bad thing, although eventually we hit a wall, and that's when we get problems. Resetting the table for the morning, on Friday we had a surprisingly up day. The Dow was up by 0.4%, up 132 points. Standard & Poor's was up by almost over 0.5%, up 22 points, and the Nasdaq continued its recovery too, up 36.5 points, which was good news after kind of a brutal week. 45 minutes before we open, what are we looking at today, Phillip?
Well, right now we've got the index is all heading up this morning, Dave. Pretty significant. We've got the Dow Jones 30 up 0.7. We've got the S&P 500 up between 6 and 0.7, and then we've got the Nasdaq 100 up about 0.3. The big winner right now is the Russell 2000 up over 2% this morning before we get trading. So that's a big move for small cap.
Really?
On the other side, Dave, we've got the metals are kind of retreating. Silver down 1%, back down almost to just at 23.08 an ounce. Gold down below 2,000, down 1 3/4% this morning to $1,967 an ounce, which means crude oil is heading up this morning 2.1%, to $70.73 a barrel.
I could almost live with that because that indicates expectations of the economy not going as flat as they were afraid of last week, and we were getting down dangerously close to 65. Overseas markets, Europe is up this morning, pretty big time, as a matter of fact, over 1% in England, Germany, and France. The Asian Rim market closed fractionally down this morning at 6 a.m. after a couple of days of not having to watch us all that carefully. Trying to keep a tab on where your financial plans are for retirement is something that sometimes takes an expert pair of eyes because you never know where the risk factors really are in your portfolio. How do I find you to get that look, Phillip?
Evan, give us a call at 863-382-0037. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And back here again on Light FM tomorrow morning about the same time. See what went on today if we can keep that green ink going. Have a good day, Phillip. I will catch you in the morning.
All right, sounds good.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. I hope that you had a great weekend. Welcome to this last week of March, and stay tuned tomorrow. We'll have more news and more updates then. Until then, have a great day.